Hey, we're going to talk about Foreign Investment Fund FIF. This is a very important topic if you have invested in overseas. So FIF is a special tax rules applied to investors who invested more than 50,000 New Zealand dollar in foreign investment funds at any point in the last tax year, 1st of April to 31st of March, even you just invest for just a day. If FR rules apply to you, you will need to calculate your total overseas income from your investments to include your individual tax return R3 or trust tax return R6. If you want to know that FI rules apply to you, there's a few questions that you can check. First of all, have you invested less than 50,000 in overseas companies or managed funds? If you do, FIF rules does not apply to you. Or do you have ownership that more than 10% in the overseas company? Luckily, most but not all Australian companies are exempted from FIF. To be sure, you can go to RD website to check in AXX exempted list to see any Australian company that invested are exempted from FIF. If there are two of you, you and spouse, have invested less than $100,000, then FIF does not apply to you as well. So what does 50,000 New Zealand dollar means? It's a cost price, what you have paid for them, and does not include any gains or losses. For example, you have invested 49 New Zealand dollar worth of Tesla stock, and during the year you have gained $100,000 of profit. FIR rules does not apply to you because you have only invested 49 New Zealand dollar, and there's a cost price when you first invested. If you invest 10,000 every year, and by the 5th year, FIR rules will apply to you because in the 5th year you have 50,000. And during the tax year, you have invested 49 New Zealand dollar of share and bought another 5,000 and sold 10,000. It will still apply to you because your share costs have more than 50,000. But in the next year, FR rules will not apply to you anymore because you have sold 10,000 worth of share in the previous year, and in the current year you have less than 50,000. So FR rules will only apply to you the year you own those shares. In the following year, when you have less than 50,000 New Zealand dollar invested, the FR rules will no longer apply to you.